Good evening and welcome to the Silicon Valley Entrepreneur, a series of conversations with startup founders and the investors who fund them. I'm Chris Gill, President and CEO of SVASE, the Silicon Valley Academy of Startup Entrepreneurs, the largest and fastest growing support organization for entrepreneurs in Silicon Valley. Tonight I'm delighted to have with us Sarosh Kumana, who is a member of Sand Hill Angels and also a board member of the Technology Angel Investors of California. So Sarosh, thank you for coming along.
It's a pleasure. Thank you for having me.
Not at all. So we're going to talk a little bit about incentives for investors in Silicon Valley. But first of all, tell me a little bit about the Technology Angel Investor Organization. I wasn't aware of this until I met you.
Right. So Technology Angel Investors of California, TICA, T-A-I-C-A, TICA.org, is an association of angel groups in California. And it was formed because we understood that California was operating at a distinct disadvantage relative to other states in the United States in competing for angel funding. Not only that, but we also compete globally for startups, and startups, as we know, are the engines for job growth. So if we don't have an ecosystem that supports job growth and supports angel investing and startup investing, we're going to have job losses, and that's exactly what we have seen. And both of these factors occurring together made the connection kind of obvious, and as we started researching the connection, we realized that California needed to step up its game if it wanted to compete globally.
Okay, so in the spirit of full disclosure, people should be aware that I'm also a member of Sand Hill Angels, but tonight I'm going to try and be an impartial moderator here.
Sure. And
bring up the issues. So to an outside observer, this may seem a little odd. I mean, if I look at some of the numbers, which is why I've got this piece of paper here, sure, from the Angel Capital Association,
right?
Silicon Valley accounts for 40% of the angel investment in the US. And if you add Southern California to that as well, then California as a whole accounts for 50% of the angel investment that happens in the USA. So maybe as an impartial observer, you'd struggle to say, well, why do angel investors in California need an incentive if they're already doing 50% of the angel investing in the USA?
Well, technology employment in California in the year 2000, 10 years ago, or 11 years ago now, was about 1.1 million. Right now, it's about 930,000. In other words, technology jobs in California have actually gone down over this period. And it can be understood by looking at the pattern that startups have of increasing employment until they get to a certain size, and then they start looking for economies and they outsource or they are able to do things more efficiently, and then they start dropping employment. So in order to keep employment up in California, it's a kind of constant stream of new startups is needed that will increase high-paying jobs in California.
Well, I'm certainly seeing some of that. I mean, if I take, for example, on the SVASE website, there is a job database for jobs in venture-funded startups, and right now there's over 3,000 vacancies there. So I'm very surprised to hear that the number of jobs has actually gone down. Can you explain a little bit more about that?
Well, the critical thing to understand is that tech jobs in the rest of the world, so an engineer, a software engineer, other than in the United States, might cost a lot less to have. So a lot of companies, especially as they go through some kind of growth phase, they find that they can get the same kind of expertise, the same kind of production from someone in a different country, say Bulgaria or India or Russia or wherever, for a fraction of the cost that they would have to pay here in the United States. So that's one part of it. The second part of it is that the H-1B program for bringing talent into the United States has kind of fallen behind the times. I know that there's been a huge amount of talk about this. There's been a lot of media about it. And unfortunately, that has not translated fast enough through the political process to make the changes that are needed to bring jobs into California, jobs that are available, so that the people who are filling these jobs can be spending their money here, can be paying taxes locally, and unfortunately, perhaps startups move at a faster pace than the pace of politics in California and the United States.
Okay, so you are talking here more about jobs than anything else. So the incentives that you're looking for angel investors, what's the purpose? Is it to put more money in the angel investors' pockets so they have more money to invest? Is it to create jobs? What's the purpose of the incentives, and what type of incentives are you looking for?
Right, so the proposal that we have is for a tax credit for angel investors in startups at the rate of 10% of the amount invested each year for 3 years. So this amounts to 30% of the amount that is invested in the startup. Mm-hmm. Now, the vast majority of startup money goes into salaries for the startup entrepreneurs, to pay them, to pay for the engineers, to pay for the research and development, all of that. A very small proportion of that goes into non-personnel expenses. Mm-hmm. So if we have a startup company in California, chances are the vast majority of the money that's put into the venture is going to go into salaries, and therefore it's going to flow through to the state in terms of income taxes and in terms of sales taxes and all the services that these new employees will spend. Okay, so there's a fairly direct link between a startup and more jobs in California. Okay, and that's what we're trying to do. Now, eventually, this will reduce the risk of the entrepreneur because there's a portion of the investment that he's going to get back in relatively short order, not the whole lot, but a small portion, only 30%, and that will reduce the risk for him, and therefore that'll make him or her more likely to invest in the startup. So it'll increase the total amount of capital that's available. Now, it's particularly important to realize that there are 27 other states in the United States that do offer tax credits for technology investments. Mm-hmm. Okay, there are 9 states that do not have an income tax at all, and therefore to have a tax credit would be kind of meaningless because it goes against no tax that they already pay. So therefore, California is competing with other states in the U.S., and we are actually kind of losing that battle. There's a recent bit of data that I saw that said that Michigan actually created more new net technology jobs than California. In fact, Michigan was the top state for the year, I believe, 2009 to 2010. And there were 4 other states named, I believe, Utah, South Carolina, and another one, that all came before California. California was not even in the top 5 list. Now, this is kind of shocking. California is the cradle of startups. It's the place where the whole startup, venture, technology, angel funding, venture capital, all of that started here. Yeah. And for us to cede our leadership to other states that have figured out how to do it and are aggressively going about grabbing jobs that could be coming to California, I think it requires some attention from our politicians, especially when we have unemployment in California at over 12% relative to the total in the United States, which is something over 9%. This is overall unemployment. So California isn't doing that well, and I think that we need a wake-up call, or we actually have a wake-up call. It just needs to be heard in Sacramento.
So you mentioned the link between startups and job creation.
Yes.
Can you expand a little bit more on that?
Yeah. So the cycle typically goes something like this. In the early years, a startup will increase employment fairly sharply. As it's successful, the unsuccessful ones will probably kind of, go by the wayside, but the successful ones will ramp up their employment very sharply, and then once they get into a relatively mature stage, and that could be 5 years out, it could be 10 years out, it could be more, not sure, then they start looking for economies in their expenses, and then they start looking for lower cost places to do business and to source, their inputs. And so it's a cycle that favors where startups favor jobs, and the larger companies actually tend to lose jobs. Now, there's another dynamic that's at play here in California as well, and that is that there are a lot of manufacturing jobs that have been lost, and it's been well documented, and there's a lot of service jobs that have actually been created. I mean, there's a lot of the jobs that have been created have been relatively lower paying jobs. And so the average wage goes down, and the average tax collected goes down in California as well. And this results in budget deficits. This results in cutting off funding for a variety of projects that really government ought to be funding: infrastructure projects, roads, education, and so on. And funding for all of these has been cut, particularly because there are other claims on the budget that tend to be codified into law through ballot initiatives, through legislation. Pensions, I think there's been a lot of discussion about how pensions are eating up all the budgets of cities and the state, and all of these squeeze the capacity of our state to continue to be the golden state.
So do you have any numbers about what impact doing the tax relief that you're talking about would have on the creation of startups and the creation of jobs? And if we think that California as a whole is 50% of angel investing in the US, I mean, in the US it's $20 billion through angel investors annually. So that's $10 billion in California through angel investors. That's a huge number. Do you have any numbers that of the impact this tax relief will have?
It would be I don't have solid information, because we're talking about projections. We're talking about something that's out into the future. So all I can do is I can go by the experience of some of the other states that have implemented these kinds of tax reforms and incentives. And there are a couple of states that have seen their the number of startups and the amount of investment go up by a factor of 4 over a 10-year period. Okay, so as much employment as 10 or 20 billion would create, it would be several times that if the total quantum of investment went up. So how much would it be? I can't really tell you for sure, but I know definitely that it would be more. And if we add 10,000 jobs or 50,000 jobs or 100,000 jobs or whatever the number is, it's something that we really need to have in California, particularly because these are the engines of job creation. These are high-paying jobs. It is what will retain the leadership that California and Silicon Valley has had in the technology and in the startup world for all these many years, and which we are now in we are likely to lose that. It may be slow, it may come over a number of years, but it was developed over a number of years. This leadership was developed over a number of years, and when we lose it, and other companies and other countries and other states have developed the infrastructure and the ecosystem to make it happen over there, it's going to be harder to bring them back.
Right.
So it would be much better not to lose that leadership in the first place, to maintain that by taking action now.
So if we look at the angels, is there a profile of a typical Silicon Valley angel? Are they early employees of Google and Facebook? Are they people who are serial entrepreneurs who've made their money through selling their startups? Are they middle management from bigger corporations? What does a typical Silicon Valley angel look like?
Well, you know, you've actually described the typical angel fairly well. They tend to be people who have a certain amount of excess liquidity, perhaps through a company that they have sold out, they've cashed out of, or either fully or partially. It could be senior or upper level management of larger corporations who want to perhaps get into something else, and they just have enough experience that they are able to provide not just their money but their networks, their experience, their advice to the younger entrepreneurs coming up. An angel investor has to be so-called accredited investor, and an accredited investor is someone who has income of over $200,000 for a single individual, $300,000 for a couple on an ongoing basis, have I think over $1 million in net assets, liquid assets. Certainly they have to have the liquidity to go out and take these kinds of risks, because the larger proportion of startups actually fail. So they have to take a risk, and they do take a risk. And in an environment where IPOs and the public markets have not really kept pace the way that they did in a couple of decades ago, the possibility for exits is smaller, and therefore in order to provide sufficient return, to provide sufficient incentive for angels to step up and take those risks, requires that the state participate in de-risking the project to a small extent, and that's what we are proposing at TICA, Technology Angel Investors of California.
Okay. Do you know if, do most angels make money out of the investments that they do?
Well, it's a fair question. There was a time when it was relatively easy. There were a lot of successes. This is kind of in the early days of angel investing. It's gotten a lot harder. The competition has gotten tougher. There's competition from all around the world. There's competition from low-cost providers. The dissemination of technology has occurred at a blindingly fast rate. It has gone to a number of countries, and a lot of the efficiencies and benefits of technology dissemination may have been already realized. So some of the the low-hanging fruit perhaps has already been realized, and it's harder now to make money and make a lot of money the way that that people used to. So that makes it even more important to create circumstances where people are willing to step up and take those risks. Now, what we are talking about is experienced entrepreneurs. Angels are typically experienced entrepreneurs. They've been through 2 or 3 startups already. They've had senior management experience. They've had experience growing and ramping up a business. They really are the experts. And when they decide to put their money into a startup, it's a pretty good bet. Even though it's a pretty good bet, there are failures in the startup world. So, however, it represents probably the best opportunity for the state of California to co-invest. Actually, not just the state of California, we're talking about the citizens of California to co-invest with these very experienced investors and managers who are putting their money up. So it's not like they're asking somebody else to put the money up. They're putting their own money up. And what we're talking about at TICA is for the people of California to step up and invest with these experienced entrepreneurs shoulder to shoulder to realize a benefit for the entire state of California.
Okay, that's interesting, because so it really is, and I hadn't looked at it that way before, investing alongside people who are trying to build the next generation of business.
Exactly.
With the best people, the emerging technologies and everything else that keeps Silicon Valley one of the most vibrant areas, if not the most vibrant area, in the world for new company startups.
Right.
And so, okay, that's interesting.
Right,
that's
exactly.
Interesting.
So, there are many other models that governments have pursued in increasing employment through startups.
Mm-hmm.
And in some instances, a bureaucrat decides which company will win. In some instances, a politician decides which company will get funding or which will get loan guarantees or other kind of favorable treatment to encourage it to go forward. However, I believe that those models are less likely to be successful than co-investing with the cream of the crop, the cream of the investors who are putting their own money up at the same time. I think that they will have the highest probability of success.
Now, all right, if we step back a second and,
Yes.
and look at it from the outside view, California California angels are already investing half the angel money that is invested in the USA. Half the money.
Right.
Now.
Right.
And so, as a status quo, there's a lot of money going in. Why did you decide? What was your incentive to jump on this, to say, I want to create this incentive for even more angel activity in California?
Well, we have to look at the globalized world that we're in.
Okay.
And it's not simply we are competing against other states, but we're also competing against China and Korea and India and Eastern Europe and a lot of places that have terrific incentives and offer all kinds of unheard of things that would be politically not feasible here in the United States. But for example, I've myself invested in a company that is overseas and that has provided 100% tax-free. The gain is 100% tax-free. And they have done it because they want to increase the number of startups, and they want to they want to create a hub for that kind of business in their country. And they are succeeding. Mm-hmm. And we already have a hub, but we are, it's being nibbled off. It's getting reduced by, by others being more aggressive and actually having taken the time and trouble to figure out what is required to create an ecosystem that will allow startups to thrive.
Okay. So tell us a little bit about your background, because you're a member of Sandhill Angels, you're a member of the Technology Angel Investors of California. What's your background? How did you get involved in angel investing? And
well, I am an entrepreneur going back more years than I'd care to say, but 30 or 40 years. And I'm principally invested in the real estate markets. I'm a real estate developer. I have holdings all over the country, but primarily in California and in the San Francisco Bay Area. And I decided probably something like 7 or 8 years ago that I wanted to diversify both geographically as well as by sector. Mm-hmm. And I wanted to participate in a different kind of market. And further, I wanted to it was exciting and fun to learn about a new area, and essentially that is what I have done by participating not just in through the Sandhill Angels, but through a number of other limited partnerships that I have invested in, and a number of other angel groups that I have participated with. Mm-hmm. And so the sum total of that, it makes it interesting for me, and it gives me a different place to put money, and it's I don't know, I enjoy it. Okay. I like the people, I like the energy of the startup, I like the excitement of possibility in growing a business. It's all good.
And what do you see drives most angels? The numbers that I've looked at says that angel investing as an overall group loses slightly more money than it invests. So, angels aren't making a huge amount of money out of it. And there's difficult. A huge number of angels. There's 250,000 in the US, which is a huge number.
Yeah.
What is it that drives angels to invest?
Certainly, I think that the hope of getting good returns drives angels. And I think that there's the excitement of participating in the next Google or the next Facebook or the next, whatever something is that's going to change the face of the economy, that's going to change and drive technology, that's going to make life better for everyone. Mm-hmm. So I think that is part of it. And in addition, there's just the people that I have run across in this world have been exciting and interesting and knowledgeable and smart, and people that I like talking to and like spending time with. And so it's a way to participate in this world and have fun and maybe make some money too.
Okay.
So that's good.
So what are the steps for getting this incentive voted into being?
Well, there's several elements that are needed. The first one really is that it is knowledge, is information, not just in the angel community, but also amongst the people at large, for people to understand what these dynamics are, what really happens when you have a startup and what really happens when you don't have startups, and for them to draw the connection. And then that needs to get taken up by the media, who realize that there's a shortfall, that there's a problem that needs to be addressed. And finally, perhaps the politicians and the people. It's said that politicians are leaders who lead from behind. So
right.
When there's sufficient groundswell, when there's a demand for it in the electorate, then they feel that they can step forward and do it. Now, there may be some forward-looking, knowledgeable politicians who are going to step up or already have made this connection, and therefore, will step up and promote this idea and make it work. And in other states, it has been not just the Republicans or not just the Democrats. This is a bipartisan issue. This is a nonpartisan issue. This is something for the people.
Okay. Unfortunately, we have to wrap. Thank you very much, Sarosh. It's been a pleasure talking with you.
I'd like to
I'm
say
sure there
it.
is. And it's good night from me, Chris Gill, and the Silicon Valley Entrepreneur. See you again next month.